Dear clients, welcome to PhillipCapital's weekly Market Watch. I'm Richard Leow, investment analyst from Phillip Securities Research. Today, I will share with you an update on the Singapore land transport sector. Much of today's content is based on our land transport sector report that we published on the 21st of August. The main objective of today's presentation is to engage two groups of audiences in mind: the new investors who are not familiar with the land transport sector, and the investing community at large who do already know something and are following the transport sector. For the benefit of new investors, I'll give a quick and brief introduction to the stocks listed on the Singapore Exchange that you can use to gain exposure to the transport sector. For the rest of the presentation, I'll give an update on the recent quarter and outlook for the sector. There are three stocks listed on the Singapore Exchange in which investors can gain exposure to the land transport sector. They are SBS Transit, ComfortDelGro, and SMRT. SBS Transit is a pure play on the Singapore land transport sector. All of its operations are confined to within Singapore. SBS Transit is a 75% owned subsidiary of ComfortDelGro. For its bus business, SBS Transit has about 74% market share of ridership in Singapore. For MRT service, SBS Transit operates the North East Line and Downtown Line. SBS Transit operates the Sengkang and Punggol LRT systems. SBS Transit also earns revenue from rental of commercial space at train stations and bus interchanges, and advertising revenue from within its fleet of buses and trains and network of stations and interchanges. ComfortDelGro is a global transport operator with operations in 7 countries: Singapore, UK, Ireland, China, Australia, Malaysia, and Vietnam. ComfortDelGro has 8 business segments ranging from bus station, rail, taxi, driving centre, car rental, automotive engineering, and lastly, inspection and testing. The mainstay of ComfortDelGro is its bus and taxi business. In the last financial year, bus accounted for 37% of operating profits, while taxi 34% of operating profits. SMRT is largely a pure play on the Singapore land transport sector, except for its 49% stake in an overseas associate, Shenzhen Zona Transportation, and some minor overseas consultancy projects. Temasek Holdings is the largest shareholder with 54% stake in SMRT. SMRT operates the North-South East-West Line, Circle Line, and Bukit Panjang LRT. SMRT has about 20% market share of bus ridership in Singapore. Rental of commercial space and advertising within SMRT's network of MRT stations and trains are the top 2 operating profit contributors for SMRT. SMRT also manages the new Sports Hub retail mall. I'll now go into an update for the second quarter of 2014. Fare adjustment in April helped to lift revenue for the domestic fare businesses, namely buses and trains. But the bus business remains unprofitable for both SBS Transit and SMRT. The domestic bus business will likely remain unprofitable until the new government contracting model kicks in September 2016. We are expecting keen competition not only from the incumbents, but from local private bus operators and foreign operators. Meanwhile, the negotiation between LTA and SMRT for the transition of the rail model has come to a stall. The biggest uncertainty now is, when will it happen? Based on what has been announced so far by LTA on the new bus model, it appears that the first 3 packages are to be tendered out sequentially, which we believe is to troubleshoot and improve on the process as they go along. It looks like the first 3 packages will be used for price discovery, and that the pricing for the remaining 9 packages will be negotiated around the outcome of the first 3. After 2021, the remaining 9 packages may be tendered out in phases, and not necessarily all will be tendered out. As the new bus model will be a profitable model, we are expecting keen competition in the tender process from the incumbents, domestic private bus operators, and foreign operators. At this transition phase, incumbents are facing a win-win situation of either losing market share to a loss-making business or gaining market share to a profitable business. The negotiation between LTA and SMRT on the transition to the rail financing framework has come to a stall. Apart from the hurdles that have been disclosed, we believe that part of the difficulty in coming to an agreement is the mechanism of how to return the cash to SMRT when LTA takes over the operating assets from them. Due to the delicate nature of the purchase of assets by LTA from SMRT, the negotiations could even drag on till after the next general elections. Moreover, LTA is not obligated to revise the framework since SMRT's license remains valid for 30 years until 2028. The stocks under our coverage for the Singapore land transport sector are SMRT and ComfortDelGro. We currently have a reduced rating and target price of $1.47 for SMRT and an accumulate rating and target price of $2.85 for ComfortDelGro. ComfortDelGro remains our top pick for the sector. For more details and background to the update discussed today, do refer to our individual company reports and sector reports available on the Poems platform. With that, I've come to the end of the presentation. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos. Thank you.